Good afternoon, everybody. How are you? My name is Michael, president and co-founder of BackToTheFutureTrading.com. Good afternoon, good evening, wherever you are around the globe. Maybe it's even good morning. Thank you for joining us here today. Hello, Jerry. Happy 75th birthday, Mr. Survived a Brain Tumor Guy. Everybody send some positive vibes to our customer, Jerry, who's alive and thriving and playing with grandkids and celebrating 75 years of beating odds today. He says, wanted to come and say hi. No, that's not Jerry. Jerry says, today I am completing my 75th circumnavigation of that huge ball of gas. And so it's good to have you here, Jerry. Welcome everyone else. My name, as we covered, is Michael, and today we're going to cover the power of predictive technology. There are many people here today who've purchased the software and are using it and are happy with it. One thing I'd like to do before we get started, if you are not an existing customer, okay, if you're not an existing customer and there's a market that's important to you, and you want to make sure that we analyze it today, if you are not an existing customer and want us to check the results of the predictive times, please list the market that you trade and the size bar that you trade with. So for example, the E-mini S&P, the NASDAQ, crude futures with a 1, a 3, and a 5-minute bar. It could be the pound dollar on a 60-minute time frame. It could be Tesla with daily options, or it could be Ethereum on maybe a 5-minute chart. Is there anyone here today who's not an existing customer that wants us to study a particular market or instrument? E-mini S&P, okay? Let's make sure we cover that one then. Is it okay if we look at the 5-minute chart? Okay, perfect. So we'll make sure we take a look at that. Anyone else have a market that they want me to look at here today? Everybody's really quiet. Feels like that kind of day where people are keeping to themselves. Okay, cool. You can hang out in the background if you want, not a problem. We'll definitely look at the E-mini S&P here today. Oh, Francis, you said the NQ on a 1-minute chart too. Let me make sure I put that there. Thank you, Francis. NQ 1 minute. Last call on that. Okay. So we do something very unusual here every week. We're the only company available, to my knowledge, that's providing predictive times and directions for futures, Forex, equities, and now cryptocurrencies. The indicator is built specially for NinjaTrader, which has APIs or data ports for TD Ameritrade, Interactive Brokers, FXCM, among others, that allows you to connect your existing trading account or your account with NinjaTrader to our indicator. So this is a program that's completely independent of us as a company. It's a tool that runs on your computer. And earlier in the week, I sent out a forecast for some of you that was linked to a web page that had the times and directions for some of the most popular futures, Forex, and cryptocurrencies in play right now. And you registered using this link on that web page. And so as we come and we look and we see We had predictive times and directions for the E-mini S&P, crude futures, gold, the DAX, the euro currency, the Dow, E-mini NASDAQ on a 1-minute chart, euro dollar, pound dollar, Ethereum as well. And so in a minute, we're going to talk about what these times sort of represent and what they were communicating to us in terms of possible moves at a future time. Now, we've given you those signals since Tuesday. Every Tuesday night, I schlep my big middle-aged butt up the stairs and send an email out, and I hope someone in the world who's supposed to hear the message hears it. Now, that someone is usually a trader, a man or a woman who's struggled to see profitable trading days, successive trading days in a row, struggled to see markets move in their direction when they place a trade. Our belief is that many of those struggles are the direct result of lagging indicators, tools that 90+% of people are using and failing with. And so they find us. They find us in all sorts of ways, from emails we send out, recommendations from friends, from Trustpilot reviews that they've seen online. They find us and come to this great experiment that we conduct every week for the last 13 years. In 9-10 days, we'll be celebrating our 13th anniversary. And so that's exciting to have reached as many people as we have, but I want to make sure we continue to reach the people who are struggling. And so when we send out these histograms, the indicator, the software, has done all the heavy lifting for us. We need only consult it. And today we're going to consult it in the sense of, did it have anything of value to bring us? So all of the times that you see here on the top of the histogram, they represent signals that the software has discovered lately as having irregular regularity. What does irregular regularity mean? Well, it means for some reason, somebody keeps pushing prices down at these times lately. Somebody keeps pushing prices down at these times lately. Now, you don't notice it. It's subtle. But in the historical data, when we turn 12,000 lines of code loose, a program whose only purpose it is to find the times where stuff is happening, squirrely stuff, times that move over and over again when they shouldn't in a particular direction, it lets us know. Like a golden retriever with a tennis ball, it comes back with the time. 10:36. Be careful when we get to these selling pressure times. And then conversely, all the times on the bottom of the chart that we've sent out 2 days in advance represent times where the market has been historically lately pushed up with irregular regularity. It shouldn't happen. These movements shouldn't occur at the times that they do unless the game is somehow rigged or fixed. How many of you here today, if we do a quick show of hands, we'll ask this question until 10 people answer. If 10 people answer, we can move on. How many of you believe the market you trade, whether it be futures, forex, equities, or crypto, is to some extent rigged or being manipulated by a large institutional trading entity? How many of you believe, suspect, based on the things you've seen and the experiences that you've had, the stops that have been run while you've been trading and the moves that have gone in the exact opposite direction against every indicator on your screen? How many of you perceive that somebody, an algorithm at Deutsche Bank, a bunch of people at a trading desk for JP Morgan. Somebody knew something in advance and decided today's the day we're gonna mess things up a little bit. Let's run the stops. Let's push prices higher, push prices lower. That's right. Yeah, a lot of you do. A lot of you do. So when we come and we look at these signals, we're sort of asking a question. Why do we struggle so much with trading? It would be one thing if 55% of people were failing. It would be one thing if maybe 60% of people couldn't do it. Let's go out on a limb and say 75% of people struggled with trading and couldn't be consistently profitable. But 90, 95%, 90, 95, there's something else going on, I believe. And so today we want to distinguish between two things before we go deeper down the rabbit hole together. I want to understand or help you learn the difference between a signal and a setup. Now these dots, these times that we're about to see, they're raw information. And many of the webinars that you've been to with other trading companies, they sell one system. This is what we do. We buy, we sell here. There's an arrow, there's an arrow, there's another arrow. And at our company, we've discovered no two traders use these times the same way. No two traders look at the same markets the same way. Each of you has a different approach. Small targets and stops, larger targets and stops, adding in contracts, adding out contracts as you hit targets, higher time frame analysis, all sorts of things. And so before we look at a setup, we want to understand if the raw information did anything noteworthy. If the raw information did anything noteworthy. And then we'll determine if an edge emerges from predictive times. Okay, so let's walk our way over to the crude futures chart from today. Right, here's oil futures from today. Now, what I'm going to do is remove the moving average completely. We're just going to look at raw times together. So we'll come down here, we'll get rid of the moving average and hit OK. So we just have some times on the screen. Now oil, as many of you are aware, is very volatile lately. Very volatile lately. Because if you haven't noticed, the world's on fire. Crazy people with nuclear weapons are fighting over natural gas rich areas with pipelines and access to ports where they can ship their crude oil through the Mediterranean to Europe. It's insane. It's insane. And so one of the things I want to establish with you before we move forward is this. Can everyone see where it says 109 on my chart and 109 on the prediction that's been available since Tuesday? Lauren, can you see that? Hey, Kimberly. Hey, Julie. Julie, why are you here today? You keep coming back. I don't understand. You're so confusing. Daryl, does it show up where you see 1139 and 1139? Right? 1036 and 1036. Can we all agree? Thomas, can we all agree that the times and directions that I published to the World Wide Web on Tuesday are matching what's on my chart today on Thursday? Jerry, can we agree with that? Can everyone hear me? Is this thing on? Okay. Now, thank you. Rodney Dangerfield would say, this is a tough room. This is a tough room. Take my wife, please. And so I want to direct your attention to the kinds of posts I encounter every day before we look at something. This is a group I belong to. Some of you may be a member of this group. This is the E-mini forecasters, E-mini S&P 500 futures. And this fine gentleman, about once a week, Mr. Aaron, posts this picture. And he says, in case you didn't know, there is no way to accurately predict the market. So every day I wake up, Melissa, I schlep up these stairs and I walk into essentially a Weather Channel level 5 hurricane of doubt. And moreover, mocking. If you even try or insinuate that you can do the things that I think we can do, people kind of take a nice little jab at it. So now that we have those times, here's what I want to look at. What actually happened at those times in one of the most volatile markets in the world that's completely unpredictable? You've got ISIS and Al-Qaeda and Saudi Arabia, BP, JP Morgan working with the stock market and pushing up the prices of Exxon and Shell and Putin and all sorts of chaos. Let's take a look at what happened at the times that we've had since last Tuesday. This Tuesday just passed. What happened at 7:48? What happened at 8:27? What happened at 9:03? And even though it wasn't a huge move, Dusan, can we agree mutually together that it hooked over and dropped at 9:42? Can we say there was a pullback and a push up at 10:09 and a drop, a big drop, a substantial move at 10:36? I think we can all agree about that. Now, before we continue, I want to make sure, if you're one of the doubting Susans that doesn't believe what's true, this was posted. We can look at the logs on the website. We can see when the page was updated. I would swear on a stack of Bibles, my children's life, and write a $10,000 check to anyone who could prove that these times haven't been sitting on our webpage since before I emailed all of you on Tuesday night. And when we get to the times and we continue to move forward, at 11:39, the market goes up. And at 12:42, the price of oil drops again. Until when? Just before 109, where it shoots back up into 124. Now, there's literally nothing up my sleeve at this point in the presentation. Since Tuesday night, I've been sitting here like all of you wondering what will happen. Now, here's a question. Melissa, what happened at the 157 signal in oil? What did institutions hope you would do between 157 and 3 o'clock? Sell. How many of you get caught in stop runs all the time? Wouldn't it be nice if there was a way to know in advance not to sell? And we can all agree that the market did go higher between 157, 3 o'clock, drop down into 136, and then up again into the close. This is one of the most accurate before and after that I've ever seen in the 13 years of doing this. And it shouldn't exist. Let's go and sort of take a step backwards. Can we say that the signals were at least 60 to 70%, the signals, not the setups, accurate, in that what we expected to happen at the time in the future actually did at least 60 to 70% of the time. Can I say that and maintain a straight face? Jerry, what do you think? Yeah, it's crazy. This is abso-freaking-lutely crazy. And every day I walk into this office, I know what I've seen and I know what I've shown you for 13 years. 50 webinars a year, that's 500, 600, 700 webinars. And this is what's happening over and over and over again. We recently ran a test. I had my business partner run a test for me and said, hey, on the E-mini S&P, what if you just bought and sold from the open to the close? What if there was a buy dot and you bought it and a sell dot and you sold it and you used the stops that are on my screen right here? You want to see what it looks like? This is from March 1st to April 20th. And Jerry, if all you did was trust the signal from 9:30 to 4 o'clock, this is 714 with a swing strength of 10. If all you did was buy at a white dot and sell at a blue dot from the open 9:30 to 4 o'clock, the close, over the last 307 signals, if you started with a $10,000 account, hypothetically, you had an equity high somewhere around $38,000 with one contract. And it's pulled back now to 32.7 with a hypothetical commission kicked in there. So the data seems to support a raw setup, right? There's a raw setup involved. Just buy at the white and sell at the blue, sell at the blue and buy at the white. There's almost 60 days worth of data here. And that seems to support the idea that what we're seeing isn't random. What we're seeing isn't random. Okay. Now, if you're an equities trader, some of the equities traders are kind of quiet. And so I have to show them on the chart what we've been watching. We get a lot of requests for international conglomerates, places with offices all over the world. This one's Alibaba. And with Alibaba, you can see what's happening at these buy and sell times. This is on a daily chart. And so if you had used the software for a put on March 31st, we know that the put has legs up until and around April 24th. We've been watching this trade now for weeks with you. Okay. We can also come out and look at the daily charts together. If I get rid of all my scribbles and we just look at big picture stuff. Drawing tools, remove all drawing objects. Yes. Take a look and see what's been happening on a daily time frame. And you'll see that we're in that same 60–70% window. What has the software been warning us about since April 7th, the day before my birthday? What was it warning us about since February 22nd? What was it warning us about since Monday, the 7th of February? And if you just connect the dots, right? We go from blue to white, white to blue, blue to white. What's happening here? Melissa, that shouldn't work. And I publish these times on the E-mini S&P Facebook page, and I publish them in the webinars like we're doing here today. And still, the mocking, the jeering, the doubting, there's no way this can work. I got news for you. This is how the game is played. This is what the people who are moving the markets, who've already gotten ahead of the market crash, who've already moved their assets over to commodities like wheat and oil and gold, who've already started shorting the market up near the high, back like they did in 2008 and 2009, all of those jokers are the ones who've been selling and buying and buying and selling at these times, right? Okay, so we've seen a couple examples of proof of sort of what's been happening about and around these predictive times that I give you in the webinars each week and give you before the webinars each week. Okay? And so you were really up against the ropes. We're really up against the ropes. What is trading? Is it about looking at your lagging indicator and saying, whoa, my volume had a spike just then 10 seconds in the past? Oh, my order flow analysis told me what people did a minute ago in the past. And so many people are caught up in this idea that somehow what happened 5 minutes ago, 10 minutes ago, 20 minutes ago will help them. I contest that what happened 5 minutes, 10 minutes, 15 minutes ago is designed to throw you off emotionally. It's designed to put you off balance. It's designed to lure you into a position like 100 million sheep with a contract right before the shears come out. And you drive prices down for the institutions and they buy at wholesale levels. You drive prices up and they sell at wholesale levels. Okay. Now, what's the difference between a signal and a setup? What's the difference between a signal and a setup? And I'm going to teach you the rules for a basic trading signal that we put out and publish with the times. We'll be teaching how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. This video provides an overview for these. If you've watched the video, this will be review for you. We're going to use a max 1.5 ATR volatility stop when using the setups for the Thursday demonstration. So not only did I give you the times in advance and the directions in advance, I gave you a trading system we would apply to those times in advance. And so we've been waiting 2 days to see what would happen at those times. Let's take a look. There are two types of setups: a signal with trend and a puncture trade. A signal with trend is relatively easy to understand. If the market is trending down and we use a 120 period moving average, it's nothing magical. Then we're looking for signals that are selling pressure signals. And there's one of two types. There's the flat out unadulterated signal with trend. It's below the moving average. It closed below the moving average. And so our entry will be at the close of the candle. Our stop will be 1.5 average true range values away from the high. It doesn't have to be 1.5. It can be closer. It can be farther away. It's a matter of risk tolerance. We've discovered that a 1.5 is just outside the noise of the market. If it moves much farther than that, the trend is probably reversing and the signal was wrong. So again, stop, entry, and now the exit is going to be the next time. close of bar, next time. So the next buying pressure time is going to be when we exit. Pretty simple, right? Now, an alternate to that is if we start out above the moving average, let's say we're up here. We'll fill in those signals again. And Melissa, what if we close above the moving average, right? We can't do anything. It's in the wrong side of the line. But Jerry, check this out. If the next candle closes below the moving average, guess what? We can take what's known as a crossover trade. We put our stop just above the candle that closed below. We enter at the close of the candle, and then we exit at the close of the bar for the next time. So check it out. Stop is here, entry, and then the exit is the next time. And this is what's known as a signal with trend. Now, if the market is trending down and we arrive at a buying pressure time, here's where things get a little brainy, a little heady. If we arrive at a buying pressure time and we still have that stop line, here's what I'm waiting for. I'm waiting for a candle to puncture that stop line. If a candle punctures that stop line, it tells me that whatever buyers were supposed to come in at this time haven't. Whatever institutions or algorithms were supposed to come in and push higher or take profit or move in a consolidation pattern left to right, they haven't. And so if I'm going to sell short, what better time to try when the people who normally buy and take profit are standing on the sidelines? A failure of the buying pressure time in a downtrend is the same thing as a successful resumption of trend conceptually. The police that should be in the bank sitting on the chair looking at me intently as I walk in with my weapon of choice aren't there. They're in the back. They're on vacation. They're in the alley. They're not there. And so in this case, per the video, what we're looking for is a stop just above that puncture candle, an entry right at the line, and then we hold it until the close of bar of the next time. The entry is in the direction of the trend, and then the stop goes just above the puncture candle. This becomes a short, and we call this a puncture trade. Anyone have any questions about the differences between a signal with trend and a puncture trade? This is a setup. This isn't a signal. This is a mechanical, rules-based, how will we enter, where will our risk be, where will we exit approach. And remember, we gave you this information with the times and the directions 2 days ago, before Wednesday's market and before today's market. When we come through and we do that, and we start to add these up, and we go long and exit, then we go long and take a stop, and then we go short and exit, and then we go short and exit, and then we go short and exit. And then right here, look, it happens 3 times in a row. Short, Melissa, hit the stop above that candle that punctured. First try. Short, comes up, hits the stop above that candle. Second time, third puncture, down, and we exit by the next dot, 255. And then we go in at 255 and we're holding it until 330, which was right here. When I do that for 2 days, 2 days of the E-mini S&P, right? If we come back and look at yesterday, and I do those same signals for yesterday and today, this is the result. You can go back and check if you're a customer with the software. If you started out with a $10,000 account, you finished by 3:30 today with 3,600 more hypothetical dollars. This doesn't include commissions and slippage, and it's all hypothetical. But what I want you to see is that we applied a very basic rule set to the signals. A very basic rule set to the signals. And when we did that, we ended up with a positive expectancy. A positive expectancy. Now, we'll look at the NQ in a second, but I ran a test on that one on the 1 minute chart. Can you guys see up here where it says NQ 1 minute 90-day trend and all setups comparison? This is from 8 in the morning till 12 lunchtime, 4 hours a day. Now look at the date. From January 10th all the way through and up to and including April 7th. When I did that, can you see the results here? With a trend filter, doing what I just did over and over and over again on the NQ on the 1 minute chart, look at the net result with one contract. That's $80,000. So there's a positive expectancy when we apply predictive signals to active live markets. There was a test that we ran 2 years ago on the E-mini S&P on a 3 minute chart. And we wanted to do the same thing. Signals with trend, no punctures, just signals with trend. April 20th, here's a section all the way through, this is 2 years ago, around the same time of year, April through June, 900 setups in the direction of the trend. The model had an expectancy of 54% with a profit factor of 1.5 for all trades, US, Asian, and European session. If you just looked at the Asian session, the results increased even more. If you're in Australia or Thailand or Malaysia, that one had an expectancy of 56% with a profit factor of 1.8. That means you made $1, every dollar that you lost, you almost made $2 over and over and over again using predictive times. Now, if we apply that to other markets like the NQ today, how long would we have to do this to see if the signals worked or not? Who asked me earlier if the NQ 1 minute chart would work? That was Francis. Hey, Francis, was the NQ in a 60 to 70% signal expectancy window today? Did it go down at the blue dots and up at the white dots at least 6 or 7 times out of 10? Look at the open at 929 that we've been waiting for 2 days. Well, at that point, it would be a day and a half. Ready? $103 from 929 to 937. That's $2,000 per contract. And then we can come through and take the stop losses out and do the same thing. I'll put the winners at the top and the losers at the bottom, right? And you can add it up. 1035 to 1039, $24 move. Puncture from 1040 to 1048. Sell short from 1048 until 1054. Another winner. No puncture. Sell at 1101. Exit at 1117. Small loss. Puncture. Small loss. Sell at 1126. Boom, 1139. We exit with a $70 move. It's $1,400 per contract. Sell at the puncture right here at 1146. Boom, out by 1148. 1148, Francis, we sell. When we get out by lunchtime, boom, 40. Let's add it up. 40, 111, 125, 155, 175, 100, let's call it 200, 226, 326. Let's call that 280, 275 minus 15, 260. $260 using the predictive times $20 per contract is $5,200. Well, Michael, I only trade the micros. That's $520 by lunchtime. Francis, how did we do that with signals that have been available to us since Tuesday night? Did I have any influence over it other than the creation of the software? No. 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 Okay. Any questions about this? Any questions about this? It works on Forex as well. You can look and see this isn't the 1 minute NASDAQ, it's a 15-minute dollar CAD. And you can sell it all the way down and buy it all the way up. And so what's wonderful about these charts, let me see if I can get this figured out. There we go. What's wonderful about these charts is that they're entirely predictive. They don't lag. We're always waiting for something in the future. So here on my chart, you'll see the next signal coming is 2 in the morning. The next signal coming is 2 in the morning. And then 3:15 tomorrow morning, 6:30 tomorrow morning, 11:30 tomorrow morning. Our charts are different from every other chart you've ever seen. Why? Because this is what happened at the times we were expecting. So those times are already in the past. And then in the middle of the chart, we have now. If it was a mall map, it would say, you are here. You're here right now. X marks the spot. And then all the stuff to the right, what you should, could expect in the future. How much easier is it? How much easier is it to see what's coming prepare for it, and react as it happens. What if I told you we're going to walk down a hallway and the hallway has 100 closets, but Melissa, I'm going to tell you which closets the scary clowns are going to jump out of. Closet number 1, 17, 35, 67, 78, and 92. There's a very high likelihood those closets have scary clowns behind them. It's not as scary anymore. You stand in front of the door, you get in your fighting stance, you cock your arm back, you move through, you swing your hips, you plant your rear foot, you transfer your weight. Your hands are up, you're on guard. It's a lot different from using a lagging indicator. Can you show me the DAX on a 1-minute chart? Yeah. Here you go, Mike. There's the afternoon signals. Very similar to the NQ, right? Could you have made a few bucks selling the NQ or the DAX short today? Yeah. 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 So looking at the chart, whether it's that or LOL, the E-mini S&P, we always see the times in the future. There are the times LOL for the ES tomorrow. This is what we were waiting for. Absolutely, Mike. This is Tacheon Warp. Tacheon Warp. And so LOL, again, why is this chart different than other charts? Here's where we are right now. Everything to the right of that white line is an expectation in the future. These are appointments that we have with the market makers to see, are you going to do it again? Mr. Jamie Dimon, are you going to push the market up at 310 or 1005 or 220? Because if you are, I'm going to risk a little bit to get in on that action. We just finished watching a Netflix series called Peaky Blinders. Anyone watch that show? Peaky Blinders. Tommy Shelby fixes horse races. Fixes the horse races. And what does he do with his friends, Mike? If you're one of Tommy's friends, what do you get before it happens? If you're one of his friends, what might you get before it happens? The winner of the horse race. A tip. Bet on Blue Bonnet to win the race. These are all tips. It's as rigged as the horse races were on Peaky Blinders, and we know in advance what to look for. And again, the statistics don't lie. When we apply this concept over 90 days, and you see that there are close to 945 data points, your margin of error is below 5 or 6%. We're well beyond the, well, it could have been variation, and it could have been market noise, and yeah. I don't know why Jay Leno wants to talk to those people in the webinar like that. We drifted into Jay Leno there, Melissa. Well, you know, with the markets, and they go up and they go down, you never know. So we're far beyond a statistical anomaly. It just works. It just works. Right? All right. Any questions about what we've looked at? We covered the ES, we covered the NQ for Francis. We looked at the DAX, we looked at the longer term signals on stocks like Alibaba. This was Ethereum today on a 5-minute chart using the times that we gave out in advance, and you can see the same places to buy. You buy at 725, you buy at 935, you sell right here, you sell again right here, you sell again right here, you sell right there. And you can see where the exits are with Ethereum, crypto. Here to here, small loss. Here to here, win. Here to here, win. Here to here, win. Here to here, win. So what is that? One winner, loser, winner, 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 winner with Ethereum. No market is immune from this. Doesn't work. Doesn't happen. How far in advance can we get the times? 1 week. Up to 1 week in advance. Can you show Apple on a 5-minute chart? Yes. There's Apple on a 5-minute chart. Those of you that trade options. Some of you do some stuff with stocks that seems very squirrely to me, but God bless, I don't judge. Can you show Apple on a daily chart? Yes. So on a daily chart, those of you that trade, these are the signals that we were expecting things at. And just so you know, we're using standard default values here, nothing special. 714 with a look back of 8, swing strength of 8 rather. And you'll see right now, April 20th, we're expecting long positions until May 3rd. May 3rd is the next put opportunity and more call opportunities on May 12th. Every signal that you see here was available weeks in advance, just like the signals are available weeks in advance right now. Everywhere on the chart you see a blue or a white dot was a lonely blue or white dot sitting on the right side of the chart, hoping and dreaming one day maybe, yeah, I don't want you to be here anymore. Hoping one day maybe it would get a chance to see, will I be a successful white dot? Will I be a successful blue dot? Will I be a successful prediction? And so you can see here from October 26th to December 13th to December 20th to January 3rd, failure on February 2nd, February 28th to March 8th, March 8th to April 7th, April 7th to April 20th. And now April 20th wants to know, will I be a live boy? Will I be a productive signal when I grow up? And right now we're seeing there's about a 6 or 7 out of 10 chance that that might happen. That might happen. I don't believe in random anymore. When I see something on the news, when I hear somebody say something, whatever channel it is, whatever political leaning, I almost don't trust anyone anymore. Yes, I did. I believe that there are patterns in the data. I believe if we look for those patterns and we trust the science of it, maybe But Julie, after a year or so, nah. So when we look for those patterns historically, we find them. We look for them and we find them. That's all we're doing here. This used to be nonsense to people. When I first saw it, Melissa, I didn't know what it was. I didn't know what it was. But when you apply the right tool to it, we see there's information there. There's actual useful information in the noise, in the chaos of it all. And so today, when you leave here today, I want you to understand, when you're looking at the markets, if you leave here today, remember, it's not random. There's somebody with a plan. When Elon Musk tweets out something about Twitter, there's a plan. When Warren Buffett says something about this or that, there's a plan. They want you on the opposite side. They want you to buy when they're selling. They want you to sell when they're buying. They want you to panic and drive prices lower so they can pick up a deal at the bottom. It's 2008 and 2009 over and over and over again in little micro batches and doses. Over and over and over again. Now, my favorite part. Which product are we talking about? This is our flagship product, Tacheon Warp. This guy right here. Tacheon Warp is our flagship product. 98, 99% of people start there and use the software in the Warp package. Tacheon Warp is an indicator for NinjaTrader 8. It has a NinjaTrader 7 variant. We wish you wouldn't use that one though, it's old. You can use NinjaTrader with your FXCM account, with your E-Trade account, with your TD Ameritrade account. You can use it with your Interactive Brokers account. There's also data feeds available for third parties, including a company called Kinetic that lets you use NinjaTrader for free as a charting platform. There are, as of right now, 79 reviews. These are people who actually have purchased the software. They are credit card carrying, receipt showing people. And if you are a person and you want to leave a review for our company, if you're a customer, please visit Trustpilot, backtothefuturetrading.com. Leave a review. Let us know how you did. And you can see the people that have and we're unable to remove any reviews. If you leave a 2 or a 1-star review, they stick forever, eternally. We're not allowed to remove them. You can see the majority of those signals are 4 or 5 stars. Hey, Mike, I'm going to have our guy Jacob get in touch with you. Jacob, can you make a note about Mike A? Let him know what's going on with Warp. And he can let you know what's up with that. Okay, cool. Let me just make a note here so I don't forget. Okay, cool. So these are people that have actually sat in the webinar the way you have sat in them and have purchased and have gone back 30, 60, 90 days later to say, I want to tell everybody what happened. The real deal, truly the best, fantastic, the right tool, good people, great software, over and over again. Customer, try it, learn it, use it, you'll love it. If those types of reviews are important, then that's available for you to go through and see what people have said. Most of you are wonderful. Thank you so much for that. Now, when you go to click Learn More, I'm going to paste a copy of the link for the software in your GoToWebinar chat box. Can someone please let me know if this link appears in your chat box dialog area? Okay, thank you. At the very bottom of the page is a giant orange rectangle. Let me know if you get to that and you can see it. Everybody see that? Okay, cool. When you click on that giant orange buy now box, something annoying pops up. Okay. This is a class that we teach for customers who have the software. It's a live training room where we show setups and executions in the market while it's rolling around. ESCL, Russell, my co-partner here, the co-owner of the company, he's my best friend. He runs the room from 8 o'clock to 12 o'clock, Tuesday, Wednesday, Thursday. If that's the kind of training that you want, we have an outlet for you, 25% off with your purchase. Today, it's only $150 a month. You can ask me if you're interested for copies of his hypothetical equity curve. There's actually videos on YouTube showing sessions and the kinds of entries that he takes. If you're not a subscriber on our YouTube channel, you can search for us there, Back to the Future Trading, and you'll see those live sessions for you to go back. If you don't want that, don't do it. Go to checkout without that. This is our purchase agreement. We promise to take care of you. Please use a computer made in the last 5 years if you can. Don't try to sell this to the Russians or publish the signals as your own signals. We'll find out eventually. We always do. And please treat our staff with respect. I know you're angry. You don't have to wear a mask anymore. Everyone can calm down a little bit. We've got one more year till the next election starts kicking in. So let's be civil for at least the next 12 months. When you get to that point, you're going to see the software price. I have a promotional code for you. We had someone earlier in here who's come to probably, a year's worth of 50 webinars so far, and they're still not convinced that what we show them is real or worth the value. And so one of the things I try to do is include a promotional code. And our code is WARPOFF. WARPOFF, lowercase, takes $500 off the list price. This is going to come with 2 licenses. So you can use one on your desktop and your laptop. It comes with, as of right now, free updates for life. It's going to come with free video archive training. So all of the training that you need to understand the software, they're micro tutorials, 15-minute videos max that walk you through the subtleties of it. And you're also going to get free installation from our associate Rachel, who I would give 6 stars to. 1, 2, 3, 4, 5, 6. She's incredible. And she'll make sure your software is operating and working very well. In addition to that, am I forgetting anything else? 2 licenses, free updates for life, free video archive training, free installation. And if you want, you can have a copy of my workspace. I'll be happy to send you templates or workspaces for any of the markets that you're watching or following along with. And if you have any questions about that, you can email me after the webinar. We also, in addition to that, we have ongoing training available. I want to introduce you to a very dear friend of mine. His name is Jacob. Jacob's in California, and I'm going to let him share his screen here in 1 second and tell you a little bit about his experience. We have pro staffers people who are trading with money as a customer that want to help other customers kind of get off the ground and get going. We also have the ability to train with me and with my partner, Ron. If you're a customer and you haven't had a one-on-one mentoring session with me, you can ask Jacob about that or contact Rachel and we'll get you the details for that. But right now, just as I kind of bow out, I want to introduce you to one of our newest associates and so you guys can learn a little bit about him. Jacob, go ahead and unmute your microphone for me and let me see if I can hear you.
Check 1 2 1 1 2.
There you are.
Oh, there it is.
Presenter, I'm going to make you the presenter. And what I'd like you to do is just let people know a little bit about your history with the company and give them your information, your phone number, your email address if they want to follow up with you and learn a little bit more. But guys, I'm going to pass this over to Jacob. Jacob is a customer. He bought the software. He's a Force customer. He's a Warp customer. And he's going to share how you can get in touch with him if you have questions about his experiences with it, and also walk you through kind of what happens after the purchase and give you, in his own words, what it's like to be a customer. So let me just say goodbye real quick. Guys, take care. I'm going to run downstairs. I have an appointment with my wife I got to run to. But it's been an honor and a privilege working with you. Jake, when you're done, just go ahead and X out of the webinar and close it out, and we'll get everybody a recording later on. Thanks, everyone.
Okie dokie. Thanks, Michael. How's it going, everybody? It's my first time that Michael gave me the microphone in front of all of you guys, so I have a little bit of stage fright going on, just to be honest. But look, that's me. I'm a real person. That picture was taken like 4 years ago, so I definitely have some more grays now. But yeah, my experience with Back to the Future trading, what a godsend. I literally call it a godsend all the time. I came on board with these guys not this September, the last September, so getting close to be a year and a half, something like that. Life-changing, trading changing, so much more. Here's one of the main, obviously the software works. I mean, you guys have been coming to the webinar for quite some time, but one of the most surprising and amazing things is beyond the software. It's the people. I truly do love Michael and Ron and Rachel. Like, they are friends, and somehow I got that feeling within the first week or two, or actually even maybe before, of buying the software. Like I was cared about, not just one of those trading company, software companies that's gonna take your money and then disappear, send you a few emails, say they're gonna do something and not do it. I've had those experiences before. The support from real people has made a huge difference in my trading, and I already loved trading maybe a little bit too much, but then coming on board with these guys, it's been I don't know, I feel like I'm part of a family now. A lot of support. If I have a question, the questions actually get answered. We do what we say, and now I have the opportunity to be the pro staffer and help other people the way that I was helped. And I just want us retail traders to succeed somehow. And I don't really believe in coincidence necessarily. Well, I do and I don't. But there's a reason that you guys are all here on this webinar. It didn't just happen completely by accident. Steps were taken, and you're here now. I really do want everybody to succeed to the best of their ability. I'd say one of the most awesome things that Warp, Aurora, Back to the Future trading tools have taught me is patience. I mean, when's my next trade coming up? I don't know. It could be any time. No, it's not going to be just any time. It's going to be one of these times. Just that alone has helped me so much. And we offer way more than what I make up. Is we make up more than we offer more than the software. I could keep going on and on and on and on. I'm known for monologues that could last an hour. I don't want to do that to you guys. I appreciate you all being here. Here is my name and phone number and stuff. One more time, if you guys want to take a screenshot of that, seriously, don't hesitate to give me a call. I love to talk about trading. I want to get you guys, and well, there's men and women on here, women and men, set up with tools that actually work and are predictive and not lagging. I appreciate everybody, and yeah, we'll see you guys next week. And yeah, over and out. Have a good day, everybody. Happy trading. Now I got to figure out how to shut this thing down. Leave webinar. Okay. Night, everybody.